Welcome back to the Neuro Finance Masterclass. We're all about that sweet spot where psychology and investing meet, helping you make, well, smarter financial decisions. Today, we are grabbing the bull by the horns, or maybe the roller coaster by the rails. We're talking about the wild, unpredictable, and let's be honest, sometimes terrifying world of crypto. And we're going to show you exactly how to tame it. So how are we going to do that? Well, we've got a 5-part game plan. First, we'll face the music and talk about hypervolatility. Then we'll dissect the #1 mistake new investors make. After that, we're giving you the ultimate psychological shield, showing you how to turn fear into your secret weapon. And then wrapping it all up with a dead simple automated action plan you can literally set up today. All right, let's dive right into part 1, the hypervolatility reality. Look, before you put a single penny into crypto, you've got to invest in your own mental prep. This is not the slow and steady stock market your parents know. No, this is a totally different beast, and you need a completely different mindset to handle it. So what's with this number, -30%? That's a huge drop in your asset's value. But here's the thing about crypto. This isn't some once-in-a-decade event. It's practically a feature of the market. And the speed, oh man, the speed at which this can happen is what totally catches people off guard. Yeah, this really puts it into perspective, doesn't it? In the world of traditional stocks, a 10% dip, what they call a correction, usually happens over weeks, maybe even months. You can kind of see it coming. But in crypto, a 30% nosedive can happen overnight. You can literally go to bed feeling like a genius and wake up feeling like you've made the worst decision of your life. And that's the key right there. That sudden shock, that gut punch of a price swing, it completely short-circuits our rational brain. It bypasses all your logic and plugs right into that primitive fight-or-flight response. We call this a breakdown in your neurofitness, which is just your mental toughness against market stress. For anyone who isn't ready for it, it's the trigger for some truly awful decisions. And that emotional gut reaction leads us straight into our next topic, the all-in disaster. We are about to walk through the single greatest, most common, and most destructive mistake a new crypto investor can possibly make. It's almost a rite of passage, and not in a good way. You know, what's so fascinating here is that this is a predictable psychological trap. First, the amateur tries to be a hero, right? They think they can time the bottom perfectly. They see the price falling, they wait for that one perfect moment, and then bam, they go all in with all their cash. But guess what? The market doesn't care about their brilliant plan. It drops another 20%. Their stomach just plummets, pure panic sets in, and what do? They sell at the new lower bottom, locking in a massive loss. So you see, in the end, it wasn't really the market that beat them. It was their own mind. By trying to outsmart the chaos, they basically handed over the keys. The market's wild swings hijacked their brain, and a painful loss was pretty much guaranteed. So how in the world do we stop this from happening? How do we build a fortress against our own worst instincts? Well, that brings us to the solution. We call it your psychological shield, dollar cost averaging. And trust me, this isn't just a financial strategy. It's the ultimate neuro-finance weapon designed to protect you from you. Now, I know some of you have heard of DCA before, maybe from day 20 of our series, but listen to me on this. In the world of crypto, this idea isn't just helpful, it is 10 times more crucial. All it is a system where you invest a fixed amount of money, let's say $10, at a regular interval, like every single day. And here's the key part. You do it without ever caring what the price is. And this table just makes it crystal clear. The lump sum approach forces you into one single, high-stakes, super stressful decision, where you're just praying you got it right. DCA, on the other hand, replaces that one moment of panic with hundreds of small, automated, totally emotion-free transactions. So instead of $1,000 all at once, it's just $10 every day on autopilot. The price is ignored systematically. Okay, now we get to the really cool part. This is where we flip the script completely. We're not just going to survive the crazy swings, we're going to weaponize them. We are going to turn those terrifying market crashes from something you fear into your greatest mathematical advantage. This chart shows you the simple, beautiful logic of DCA. So when the market's flying high and everyone's feeling great, your $10 buy gets you a certain amount of Bitcoin. But when the market crashes, when the news is all doom and gloom, what happens? That exact same $10 automatically buys you way more Bitcoin. It's just simple math. And that is the reframe you have to make in your head. A market crash is no longer a disaster, it's a clearance sale.
It's like your favorite store suddenly put everything on a 40% discount. While everyone else is freaking out and selling, your automated system is just calmly doing its job, gobbling up more of the asset at a huge discount. It has no emotions, it doesn't panic.
So this is it. This is the single most important thing you need to take away from this entire explainer. Dollar cost averaging turns your greatest fear, those big, scary market crashes, into your greatest mechanical advantage. It doesn't just manage the chaos, it uses it. Which brings us to our final section, your automated action plan. The goal here is so simple. You set up the system one time, and then you get your emotional, impulsive human brain out of the driver's seat. It is time to take your finger off the trigger for good. So here's what you do. It's super straightforward. Log into your crypto exchange, find the button that says auto invest or recurring buy, pick a small amount of money you're comfortable with, and a frequency. Daily is great for crypto, but weekly works too. Then you just set it, forget it, and let the market's natural craziness start working for you instead of against you. And that leaves us with one final thought. The strategy is solid. The logic is undeniable. The tools are right there for you to use. The machine is ready and waiting to go to work for you, buying when things are cheap, weathering the storms. The only real question left is, are you ready to trust it? Can you really, truly take your finger off the button?